It's time for today's edition of Frontier Opening Bell. Welcome, everyone. Uche Daminis, Global Market Strategist and Managing Partner at BlueFX Nigeria. Good morning, Uche.
Good morning. Thank you for having me.
Thank you. And Ayodeji Ebo, who is an investment professional and a securities analyst. Thank you so much, Ayodeji. It's also good to have you on the show this morning.
Yeah, thanks. Thank you for having
me. Both of you. The African markets yesterday, the Nigerian market made this very surprising 0.3% gain on the back of MTN's big show on the counter. The Ivorian market was up about 0.2%. Egyptian market was bigger by almost 0.5%. And the Kenyan market, 0.16%. South Africa's GSE softens 0.10%, of course, mainly because of its correlation with emerging and developed markets. The currency in South Africa also softens around 16.7 at the close of business in Johannesburg. Looking at the Kenyan market, this top stories for these days, Kenya tea factories saw their revenue were up 14% to about 79 billion shillings in the full year 2019-2020. Safaricom is that telco giant east of the continent, says it's ranked 7th, or has been ranked 7th on the Fortune's Change the World for 2020. And Bank of England or Bank of Uganda released the State of the Economy report for the month of September. It's a time the central banks are getting busy. And French retailer Carrefour is opening 3 new stores in Kenya. Is with the exit of ShopRite, Carrefour is digging in there as a major retailer. So let's talk about the Nigerian market and West Africa. The biggest story has to do with inflation that we saw before the MPR and the GDP that we had. So it's all way down to yesterday's decision to slash MPR by 11.5%, reset the asymmetric corridor as well. Uche, let me start with you. Your take on the latest MPR decisions.
In a way, that sort of was a surprise to me, but it was either of two things. It was either for the central bank to hold rates or slash it. Nobody is hiking at this period, you know. But for me, my worry is that I think maybe as a central bank, we're looking or acting too aggressive. A lot of the central banks right now globally are on that wait and see mode because there are a lot of variables that have been front run, but at the same time not necessarily adjusted for. And central banks are not wanting to get too aggressive. And when it comes to the time for you to really be aggressive, you are already out of ammunition. But again, from our own side, our own perspective, we have a lot of local headwind risk, which is sort of putting the central bank in a position whereby if the physical authorities don't step up, they have to always want to do something because we have a big deal with what is happening when it comes to foreign exchange and that risk that comes with that. You know, that risk is so interconnected with both FGI, FPI, and also generally the overall sentiment when it comes to the market and the economy, really. So I think the central bank is trying to be aggressive, trying to show some sort of pivotal standing that they can still control the narrative. However, for me, from a macro perspective, I think it might be too aggressive, but again, it's welcome.
It's a tough line, Ayodeji, isn't it? The central bank looks set now to carry some of the work that the fiscal authorities had to do. I think yesterday's statement was very front and straight. The fiscal authorities are weak right now. They don't have what it takes to lift the economy, so the central bank has stepped in.
Yes, rightly was a surprise yesterday, and it just further reinforces CBN's determination to see how they want to support the real sector. Trying to bring down as much as possible to see how banks can be indirectly persuaded to channel more funds to the real sector to increase lending. But based on our view is that the most times even the tweaking of the MPL will not translate, or has never translated into any major increase in lending. What CBN has employed other unorthodox policies like the loan to deposit ratio, intervention funds, to increase lending in the system. So, but this is more of a signal effect that they are comfortable with this low interest rate environment. If you also, CBN also emphasized that, or the MPC emphasized that they are not really in control of inflation any longer. So that inflation target of that 9% is no longer achievable. There are other factors that cost push factors that are pushing inflation upward. So we feel that the decision is more of a signal that they mean business. They want to ensure that banks lend as much as possible. If you also look at the asymmetric corridor, so bringing down the standing deposit facility down to 4.5%, which, you know, it's been capped to any amount above 2 billion that you keep with the CBN. You don't earn any interest on it. So they are just telling the banks that, see, go and look for, if you want to be profitable, if you want to earn income, let it be majorly through lending. So when you look at the books of the banks, investment securities is one major area that gives them income, as well as loans. So now they just need to focus more on how they want to grow their loan books. CBN is not willing to pay any interest on any fund that is kept with them.
Interesting how this will work out moving forward. Let's touch on Southern African market and this story about Nigeria, the Ikeja City Mall that South Africa's High Property Investment Limited says is going to sell. Part of the process used to settle is debt in dollar terms. Implat is South Africa's platinum miner, says revenue went up 44% to the doorstep of 70 billion rand, profit of 16.5 billion rand in the full year 2020. Of course, platinum prices had been rallying alongside other metals such as gold, silver, and aluminum in 2020. Now, the big story around Zambia telling Eurobond holders interest payments will be delayed until mid next year, or mid-April next year, has caused a lot of concerns around the marketplace. Uche, with the dollar come back in terms of, I saw dollar at 94.14 early today, having stayed around 93 for quite some time. This is upsetting the Eurobond, as it were, for Zambia.
You know, I think our previous sessions have actually highlighted that frontier markets and emerging markets are getting a lot positive, should I say, sentiment, or not getting it as bad as they would get, because dollar has been significantly trading lower for the major part of the year. Should, in case we see a sustainable bullish sentiment in the greenback and not just a correction, we might not be where it is we're talking about right now. I think it's just going to be total mayhem, really. The economy right now, the global economy right now, and I'm not just talking about developed market, frontier and emerging market. I'm talking about the global economy as a whole. Cannot afford a dollar strength at any point at the moment. There is too much fragility in the system, and just a highlight, a hint of what that can cause. We can see that with the Eurobonds in Zambia. And basically, this is what we are highlighting. The dollar right now, the subdued level is fortunately where dollar should be, given the current predicament the global economy is facing.
Interesting. Adeji, about this ShopRite and Ikeja City Mall story, it came out about a month or so ago, or 2 months ago, about whether ShopRite is exiting Nigeria. Now the property owners in South Africa says they want to sell it.
Yeah, I think it was a bit of more of a damage control then when they said they tried to douse that news that they were only selling a stake or part of their stake from their investment in Ikeja Mall. So I think this just reinforces the need to rejig policies to attract investment. It's very critical to us, to Nigeria. We need the jobs. We need to improve on our insecurity. We need to also rebound back to the positive region, and not even, we need a growth rate that is beyond our population growth rate. So we need to have a round table discussion and check the box, discuss with these guys we know them, so it's not like they don't even know them, but now it's those things that it's required. We need to begin to check that box to ensure that we put them in place to attract foreign direct investment. We're hoping that the FDIs too will not go in the way the FDIs have gone in the last few years, due to the current FX policy, that they really can't determine when they want to exit and when they need to take a position. So for most, when you speak with the foreign investors now, they are not even currently willing to look at Nigeria because of that liquidity policy. So I feel that it's what it is. It's most of the foreign direct investors are also, they are losing value even if the return on the investment is like 20% and you devalue by 20%. So it's not worth all the risk, worth all the regulatory requirements, disclosures. And I feel that's why they are taking that business decision to exit their business.
We've got to fix our roof. That's what it means, to stop leaking.
Yeah.
But
Yes.
again, we need to find a sustainable way of investments into the economy. A very tightrope Nigeria is walking there. North Africa is where we round off the markets coverage and some of the top stories with the Bank of Morocco, which is the central bank. Yesterday, keeping the monetary policy rate at 1.5%, says they see a very much deeper economic slump. The Bank of Algeria, which is the central bank in Algeria, also north of the continent, has a new central bank governor, Rostam Pab. And Tunisia's NBL, which is a clothier in Tunisia, says is paying a dividend of 1.06 million dinars as a gross dividend to shareholders. And Morocco's BCP Bank reports net income 13.9% to 10 billion dirhams in the first half of the year. Uchenna, when we look at the markets today, we're expecting the Energy Information Agency to report today. The markets in Europe looked very spooked with the numbers we're getting today as far as the PMI and the service PMI numbers are concerned, the currency, and in particular the virus lockdown. Is there major concerns here that you're looking at that we should be worried about for emerging and frontier markets?
I think at the moment right now, macro data that's being pushed out, being released from different economies, are sort of at some point, market participants will sort of adjust to what they think is the most relevant and most market-worthy, should I say, data. As it is right now, it is the possibility of a fresh spun lockdown, given the fact that we might be looking at a coronavirus-led lockdown into the end of the year. Now, whatever PMI data that is coming up or whatever macro data that is coming up, investors and market participants will now start to see that as lagging, because now there is a fresh risk that will determine the direction of the economy going forward into the year and first quarter and second quarter into next year. So whatever data we're looking to see now, we can see that those data will sort of be, maybe we'll have initial reaction in terms of currencies or equity space, but we'll see that it would still take a second or a backseat compared to the issue that's toward the possibility of a possible lockdown. When it comes to the emerging market and frontier market, I saw a report or tweet saying that some economies are actually not built for a lockdown. And the truth of the matter is, emerging and frontier markets fall into this category. They are not built for even a direct lockdown or a lockdown as a result of a proxy country. So, for example, a lot of these economies and market need to export and push out their produce from what it is within the country, which is a significant contribution to their GDP. However, when you're trying to sell up to the countries that are not available to work or that has crushed their demand de facto, that in itself puts you under pressure whereby you can't earn the way you should be earning. So the idea, the possibility of people going back into a lockdown mode is not looking good in terms of manufacturing and industrial capacity when it comes to frontier and emerging markets. So I think that is going to be the major focus for market participants going to the end of the year, towards the end of the year. Also, the November election also, there were two different dynamics when it comes to the Democratic winner or Republican Trump's retaining the seat. That in itself will drive the high valuation of the US dollar, which by default also affects how emerging and frontier markets react.
Thank you so much, Uchenna. Ayodeji, a final word from you. Do you think we can afford a second round of lockdown?
Nigeria can't afford that. It's very obvious. You look at the structure. For our whole structure, we can't afford to. There's no palliative that would transmit to transmit to the right channels. We don't have that structure in place like the developed countries, and even for the developed countries, for most of them now, they are also getting wary of the support. They are trying to pull the support. So I feel that for Nigeria, we just need to take all precaution not to have another second wave. And the way even it's like businesses are open fully even here in Nigeria based on even the numbers. And we believe that if we take the right precaution, international airlines that would be coming in, they need to take very good precaution, because even if we have to be able to, then our borders too, we have to be able to ensure that we don't we take absolute control, and while people also try to adhere to the strict guidelines to ensure that there's no major spread. But as an economy, even globally, we can't, oil price dipping again will be a major concern for Nigeria. Then the palliatives, where do we get the funds for the economic sustainability plan? We don't feel that, we don't think that anything has started in terms of implementation, which was also supposed to support the economy to bring us out faster. And so having the second wave of lockdown, I think it's going to be a double jeopardy for the nation.
A very double jeopardy indeed. Thank you so much. Let's leave it there for today. Thank you so much. Uchenna Menis, a global market strategist and managing partner at BlueFX Nigeria. Thank you so much. Keep safe, everyone. And Ayodeji Ebo, who is an investment professional and a markets analyst as well. Thank you so much, both of you. It's good to have you on the show today. See you again next time. Bye for now.